All right, Manipur. I hope you can hear me. Let's start. It's 11 o'clock already. Manipur, can you hear me?
Yes, sir.
Good. So, in the previous session, we talked about money exchange, but now we'll talk about taxation. Okay. So, taxation. First, let's see a few definitions. Then, after that, we'll practice problems. All right. Taxation. Taxation is, what is it? A compulsory payment levied by the government. Levied means imposed by the government on individuals or companies to meet the expenditure which is required for public welfare. Like a compulsory means it is must, right? It's a kind of, what is it? Law enforcement. The government says that since you have income, you're earning money, you need to pay some amount to the government, right? And now, how much is it? How much should we pay to the government? Because everybody has different income. Everybody actually earns money in different ways, right? Somebody we just teach and we get salary. Some people does business. Some people have a big company. A lot of different things, right? So depending on the type of your income, we pay tax to the government. And it says that which is required for public welfare, right? When we say just public welfare, what things come to our mind? The first thing is transportation. That is public transportation. Maybe in Cambodia, we do not see much, right? Actually, before quarantine, we were some public transports. Okay. But in many countries, not even neighboring countries like Thailand, Malaysia, Singapore, or Vietnam, or Indonesia, right? And if you just go there, for example, Singapore, a lot of people they use public transportation, right, to go to their work or to travel from one place to another place. That is actually it's quite cheap price. Sometimes with public transportation, even the earning is not enough to cover the expenses. At that time, government actually spends some money on this. Right? Number one, for example, let's say you need buses, right? So you need money. Where do you get that money? From this tax. And you are going to build train system, for example, as railways. And also you make a road, for example. These are all actually is how to say these expenses are met by the government, and the government uses the money that is collected from tax. The second one is healthcare, right? And also healthcare, we know that, for example, CalMeds, if you have insurance, right, at very cheap price, people may have surgery and they may get treatments, they may buy medicine, right? And even in a lot of countries, like for example, if you visit Russia or Central Asian countries, when you go to the hospitals, for example, consultation fee is very cheap or almost free. And a lot of medicine or surgery, this stuff is very cheap or even free, right? Actually, it doesn't mean that they don't have any expenses. They have expenses, but the government covers these expenses. And that money, where the government gets this money, the government gets from this tax. They collect tax from the people and they use this money on transportation, public transportation, and the health care of people. Okay, next one is education. But again, when we say education, we mean public schools, public universities, public kindergartens or primary schools, right? And everybody in most countries, they get basic education for free, right? Even a lot of universities, like if you, for example, in Uzbekistan, when I was studying there, if you pass the exam, like 40% of the students, they just study on government budgets. That means that you don't have to pay anything. And also public schools, right? Primary schools and secondary schools in most countries, it is free. But it has a lot of expenses, right? We have a lot of teachers and buildings and facilities and campuses and blah, 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 blah. So also government actually spends money, right? That money it comes from the tax collection. And we may add some more stuff like security, military, and blah, blah, blah. These are all actually public welfare stuff, okay? Classification of taxation. We have two types of taxes. It is direct taxes and indirect taxes, or indirect taxes. Guys, let me just remind you here, I'm not going to give you a long history about taxes, okay? Just here, very brief information. Let me just say tax, what should you understand? So our topic here is calculation of tax, all right? If we are a person who is working there, how do we calculate tax? So we are going to study mathematical part. But still to study mathematical part, we need to have some idea about taxes, okay? So the first one is direct taxes. Let's say direct taxes, we have income taxes, property taxes, and profit taxes. And income taxes, you know what we mean by this? Everybody, they have income, right? You're working in a bank or you're working at a university. I'm a teacher, I have income. Or you have a small business, you have income, right? And you are doing some, how to say, maybe growing some fruits, you have income, right? This kind of incomes. So you need to, if you have income, you need to pay some tax to the government. And property taxes, property tax means if you have an apartment or house or a piece of land, right? And also yearly, you need to pay some amount of tax to the government. And profit taxes is about business. If you are making profit by doing some business, maybe you have a small shop or buying something, right, and selling this, or you import products from outside and sell in Cambodia, you export something, so you make a profit. Okay, anything related to business, you make a profit, and also you need to pay tax on your maybe revenue or profit, depending on the system. When we say indirect taxes, we mean vehicles taxes. That vehicles taxes, you know, that's in Cambodia every September, I think, right? I don't know, but usually I pay in September. Just go to the bank, the bank here, and depending on the engine size, you pay tax, right? Maybe motorcycles, I don't know, it may be free depending on the engine size. For Toyota Corolla, it is 100,000 real. For Camry, it's about 360,000 real, it's about $90. If you have a big truck, depending on the size of the engine, you have to pay tax to the government. Why? Because you have a vehicle, you're using the roads, right? And also because of the smoke that is causing some pollution to some extent, all of this stuff you need to pay tax. Anyway, goods and services tax, that is GST. So usually if someone or something, a company offers goods or services, then we need to pay tax on this. Usually we see the GST at the airports, okay, because they also offer service, like when you go to the airport, you need to give your luggage, they take your luggage to the airplane, and anything, and all the service in the airport, actually, that's the tax imposed on this, we call this GST, right? And another one is GST, where do we see this? At restaurants, for example. Because when you go to the restaurant, right, they have some waitress, or they just serve you foods and something, and also they charge goods and services tax there, GST. When you get your receipt, usually at restaurants, you see this tax, GST. How about this value added taxes? If you do some shopping at Lucky Supermarket, for example, at the bottom of the receipt, you see VAT. That's also tax added on the items you are selling, on the products. Okay, these are just some types of taxes. All right, income tax and property tax. Let's talk about this property tax first. That's the easiest one. The tax is charged on the owner of land, houses, and buildings based on the estimated value of the property. Okay, estimated value of the property, because you may have exactly the same house, but because of the location, they may have different prices, right? Like for example, if you build two houses exactly here in let's say in Tulkok, another house near, for example, some suburb area outside the city, they're exactly the same, but the prices are different. Why? Because of the location, right? So not because of the house you have, you pay tax. Because of the location, estimated value, okay? How much does it cost? Or if you just rent it out, how much do you get from the rent? Depending on these things, the government tells you how much tax and you have to pay. As you see here, we have two examples. This is one house. This is another house, right? And how much tax do they pay? Do they have to pay the same amount? Of course not, because their estimated values are different. This house is just example. Maybe he has to pay, the owner has to pay 5,100 for 1 year for this house. For the other house, it is $82,000 because a huge, what is it? Mansion, right? Something like this, like a castle. That's why they have to pay a lot. Okay. So, estimated value of the house based on the size of the house and the location of the house, right? Two things, size of the house and the location of the house. So different rates in different country with different methods. Singapore, for example, 16% on annual value. And Cambodia, 0.01% estimated value, but this information was taken in 2013. Maybe, I don't know, it has changed or not, but still, when you compare to Singapore, in Cambodia is quite low. And also it says that agricultural land not included. So also you can just ask your teachers if they are teaching about this stuff, okay? If you have any business students, how much is the rate for lands in Cambodia? Actually, do we have to pay tax for the land or not? For agricultural land, like we have rice field, rice, and peanut field or a rubber field, whatever it is. Anyway, how do we calculate property tax? It's exactly similar to the simple interest rates. Very easy. It is just when we calculate simple interest rate, we use this formula, right? It is P principal times rate times time over 100. Or just R over 100. We can just write here lowercase r. And how about when we are calculating property tax? So tax, T means tax equals estimated value, EV, that is stands for estimated value. Here we have rates and time. That means that if it is annual rate, for how many years you're going to pay? For 1 year, 5 years, 10 years, all right? So T is tax, estimated value, rates, and the time, okay? For example, let's say that's for example from Singapore. The annual value of a flat is 1,020. It's also a few years ago, but now it's quite expensive. In Singapore, the cheapest flat is about $2,000 if it has like 2 bedrooms. A few years, it's about 2005, I think. Anyway, doesn't matter, any amount here. Find the tax payable at a rate of 16% for a whole year. So we need to pay, okay, you have an apartment. If you just rent it out for 1 year, maybe 1 year or for 1 month, it should be 1 year at the time. 1 year estimate value is 1,020. Maybe the small apartment or small flats. Okay, so how much tax we should pay to the government? Since the rate is 16%, so the tax we have to pay is estimated value, that is E or annual value, rate times T. So estimated annual value is, annual value means in 1 year, if you just rent it out, how much do you earn, right? That is $1,020. Rate is 16% times 1 year divided 100. Actually 16 over 100, that is 16%, right? So how much is it? It is $163.20 you have to pay to the government as a tax. Okay. How about income tax? Income tax is Not straightforward, but not so easy. A little bit different, but once you practice one or two questions, you will see that it is very easy. Income tax is tax paid on individual earnings from salaries and investments, right? From salaries and investments. Okay. So Cambodia tax on salary rates are progressive between 0 to 20%. So progressive, what do you mean by this? It means that the more income you have, the more tax you pay to the government. It means this, okay? Of course, actually, even if the rate is fixed, if your salary is more or income is more, you pay more in terms of the amount. But also in terms of this percentage, if your income is more, also this percentage increases. When we say progressive, we are talking about this part, okay? The tax rates are progressive, not the tax amounts. So here in Cambodia, it says that if your income is between 0 and 500,000 real, and you have to pay 0% tax. And 500,000 real means it's about $125, right? And if it is between 500,000 and the 1 real, between 1 million and 250,000, then we have to pay 5%. If it is between this amount, you have to pay 10%. Between this amount, it is 15%, and more than 12,500,000, so you have to pay this amount. Okay. So how should we understand? Number one, the first reason why, if your income is between 0 and 500,000 real, the tax rate is 0%. Because the government thinks that, okay, this money, maybe it is minimum wage, so everybody should use this money for their basic needs, right? What are basic needs? Like everybody uses electricity, we use water, we have to use transportation, and we need to buy food, we need to buy clothes, right? It is must that everybody must do this. So government do not charge tax or impose any tax on this amount which is used or which is expected to use for basic needs, okay? And when it is more than that, then it starts charging or imposing tax. Okay. Now, how should we understand this? 5%, 10%, 20%? It is not like this. For example, your salary is between 8,500,000 and 12,500,000, right? Let's say your income is 10 million. Does it mean that just you need to pay 15% of 10 million? It is not like this. You have to split your income into these categories, right? From each category, you will charge this tax. Now I'll show you an example. For example, so income tax is equal to chargeable income times rates. So first, to calculate our income tax, we need to identify or calculate our chargeable income. Then after that, we will apply rates. So what is chargeable income? Chargeable income is total income, all the income you have, minus reliefs, okay? What are the reliefs? We'll talk about this relief. Relief is maybe I have income, but some people are dependent on me because I have to use my salary on them. Number one is my kids, right? Because also they are dependent on me. They are not working, they are not earning money. So this is one type of relief. Okay, number two is my wife, if she is not working, and also I need to spend some money for her basic needs, and also this is a type of relief. If I have parents, they're also dependent on me. They are retired, they are not working, they don't have any income, so somehow we need to support our parents, right? And also that's a relief. Or children's education, or if you have some kind of insurance company, you have to pay for the insurance. Okay, or you are paying or making some kind of contribution to the charity house. These are all reliefs. Now we'll talk about this. I'll just show you the list. But depending on the country, we may change this, okay? So tax relief. The following relief is given to resident individuals. Imagine, for example, let's say your income is 75,000. Child relief for each child 14 years old or 25 years old if still at school. Okay, so that is 75,000 relief. And dependent spouse, it is 75,000 relief. All right, usually, what is it? You have a child, okay, in Cambodia, let's say, if you have a child, for each child, actually government takes into consideration, each child needs this much money for each month, okay, and also your spouse, this much. Now, I have 4 kids. 4 kids means I need to multiply this by 4, right? That is 300,000 real. And I have one wife, 75,000 real. Okay. For example, let's say you have one child, or let's say if your total income is 1 million real, but you are a single mother with one child, okay? You are a single mother with one child, so the rate is 5%. How do we calculate this? So chargeable income is first 1 million, you have one child, right? It is 75,000. You have to just take this out, and 75,000 for yourself, because also you have to spend this, right? That is how much? 75,000, 75,000. It is 150,000, right? And also we need to subtract this, because this 500,000 real, the government says that they do not impose any tax, right? Because if it is between 0 and 500,000, no tax. And also these are the reliefs, right? So how much is left? It is 350,000 real, right? So this one is chargeable income. Okay, this one is chargeable income. So this chargeable income is now, it is 350,000, right? In the first category, it is 5%, 5%. So that is 17,500 real. So that means that we need to pay this much amount as a tax to the government if somebody is a single mother with one child. Okay, more examples I will show you. All right, in our next slide. Different rates in different countries. For example, that one is in Singapore. On the first 20,000, it is 0. On the second 10,000, for example, chargeable income 25,000. What is the income tax? Okay, now this also this table, you have this in your paper, and that's just the first 2 rows. Okay, so that is the Singaporean system. Assume that you are living in Singapore and your chargeable income is 25,000. That means that you have certain income and you have reliefs. We already take out reliefs, right? And this much is left. That is chargeable income. So what is your income tax? So the income tax, 25,000, right? It says that according to this table, on the first 20,000, it is 0. On the second, actually it is next 10,000, it is 4%. Okay, so this 25,000, I can split this as 20,000, and here we have how much left? It is 5,000, right? And this is your income. On this amount, government says that I don't get any tax. It is 0%, right? On the next, if it is more than this, I charge how much? It is 4%. And 4% of 5,000 is equal to how much? It is $200 per year. This one is per year. In Singapore, this is your annual income, okay? So if your annual income is 25,000, I mean chargeable income is 25,000, then we have to pay $200 as a tax to the government. Okay? All right. It is already given here, but we already calculated. Guys, it's a just short introduction. Now we will focus on solving a few problems, maybe 1 or 2. Okay. All right. So now in this part, we will focus on solving problems. Okay. Taxation, as you see, shared recording. Manipur, are you there?
Yes, sir.
So can you follow me?
Yes.
Good. All right, if you can follow me and if you can hear me well, it's fine. So taxation. As you see in the picture, that is the tax department of Cambodia, right? That is the head office. It's just maybe 1 kilometer away from Paragon University, near the bridge, right? But you should know this. It is a head office. That is all the collected taxes. I think they go here, they process, and blah blah blah. Anyway, so once again, what is tax? Tax is an amount of money paid to the government which is based on your income or of the cost of goods or services you have bought. And taxation is the system of taxing people. Taxing people means, taxation means tax people, they just come and check everything and they tell you that you need to pay this much tax, right? The accountants, they need to do all this stuff and submit this to the government. So these are tax types. Already we have seen this. Taxes on income, so income tax and corporate tax. Corporate tax means that if you have a company, something, and expenditure tax, that is value added tax, VAT, special consumption tax, stamp tax, banking and insurance transaction tax, special communication tax, other taxes, wealth taxes, property tax, motor vehicles tax, inheritance and transfer taxes. Okay, and just this was information for you. We don't have to know everything in detail, but again, once again, we'll just focus on calculation of tax. So as we know, the government imposes various forms of taxes, which include direct taxes and indirect taxes on its residents to finance public spending on national defense, education, healthcare, public transportation, military, etc. So direct taxes include income taxes, property taxes, and profit taxes, whereas indirect taxes include duties. 10 minutes left. Okay. Motor vehicles taxes, goods and services taxes, GST, value added taxes. We have just seen all of these things. And also property tax is charged on the owner of land, house, flats, or buildings at the standard rate of 16% as of 2005 in Singapore on the annual value of the property. That's also additional information for you. If somebody is living in Singapore, the annual value is the expected amount of rent if the property is rented out for a year. Okay, and also we already did this example, right? That half year tax here, the annual value of a flat is $1,020. Find the half year tax payable at the rate of 16%. Half year tax is, annual rate is 16%. It is a half year, so you need to pay 81.60 Singaporean dollars to the government as a tax. If you have a flat and you are renting out this flat, and the estimated value for 1 year is 1,020. Okay. So income tax is charged on all incomes derived from Singapore or received in Singapore from sources outside Singapore during the year started 1st of January and ended 31st of December. It is also very simple. In Cambodia also it is similar. If you are working in Cambodia, or if you are Cambodian and you have business here, you have income here, or you have business here, maybe outside, but you're doing business from Cambodia, right? Somehow like this, so you need to pay tax. For example, we are foreigner, but we are working here, we have income, that's why we need to pay tax to the Cambodian government, not to my country, right? And also Cambodian, or they are doing business here, also you have to pay tax. But Cambodian people, they are doing business outside. I don't know, I think since you have nothing to do here, all your business is outside, then you have to pay your tax to that country, right, where you are living. Anyway, here what you have to know is, number one, let's get back to our mathematical part. How do we evaluate? How do we calculate tax? Number one is to calculate tax. First, you have to determine chargeable income. Okay. Then chargeable income means the government imposes tax on this chargeable income, not on your total income. So to find this chargeable income, first, you need to know your total income, and we have to take out this reliefs from your total income, and that gives us chargeable income. All right. And what are these reliefs? Now we'll talk about this. Before this, now let's talk, give information about CPF. What is CPF? In Singapore, CPF is Central Provident Fund. Is a compulsory comprehensive savings plan for working Singaporeans. Compulsory means everybody must pay, right? And permanent residents primarily to fund their retirement, healthcare, and housing needs. The CPF is an employment-based savings scheme with the help of employers and employees contributing a mandated amount to the fund for their benefits. Anyway, what does it mean? It means that at the end of each month or each year, depending on the system in the country, right? So you have income, let's say we have salary, your salary is $500, and the government says that every month, certain amount, okay, like let's say 10%, it is $50, you have to pay to this fund, and this fund actually saves your money. And when you retire, right, they spend this money on you. And also for your health care, it's like health insurance. And also for housing needs, also it depends on the countries. All right, when you just buy some house or something, maybe also they may deduct from this. Okay, so the reliefs includes, and also for Singapore, for Cambodia, it may be a little bit different, but after all, if you get the idea, that is the most important thing for us here. The reliefs include personal relief. Personal relief means the money also you need to spend for yourself. Everybody has necessary needs, right? Wife relief, child relief, life insurance premiums, contributions to the Central Provident Fund, and gives to charitable organizations like donations, right, in the form of cash, etc. The amount of income tax payable is calculated according to the tax rates. What tax rate? Now, also in the table. Below is an extract of the tax rates from explanatory notes on how to prepare the returns sent to taxpayers in 2005 by the Inland Revenue Department. But here it says that Inland Revenue Department in Cambodia, as you see the picture in the first slide, that is by the tax department. In Cambodia, that is from the tax department, right? Tax department determines who pays how much, right? At what rates. So that is one table, all right, for income tax. We have 4 minutes left. Let's finish this, and after that, we'll continue tomorrow. So on the first, on the next, also in Cambodian tax system, if you see that it is first, it is 0% and 5%, 10%, 15%, 20%. It is something similar here. So on the first, $20,000, on the next, $10,000, on the first, on the next, on the first, on the next. How should we understand this table? Okay, for example, let's do chargeable income. Okay, $28,000. $28,000 here, the total amount is how much? It is $30,000, right? Here, total, it is $30,000. 20 plus 10, it is $30,000. So that means that your income, it is $28,000, it falls into this category, right? So this $28,000, then I split it into two, on the first and the next. The first one is $20,000, and the next, how much left? $8,000 left. And here it says on the first, tax rate is 0%. So I pay 0% tax on this amount. On the next, what is next? It is 8,000. So here we have to pay 4% tax. So 4% tax is, how much is it? It is 4 times 80, it is $320. Okay, what do you mean by this on the first, on the next? For example, another example is, let's say your chargeable income is 35,000. All right. This 35,000 falls on which category here? It falls into this category, right? because 30 plus 10, it is 40,000. It means that your income is between 30,000 and 40,000. All right. Is it between 30 and 40,000? Yes. Then we split again. On the first, it is 30,000. And next, how much left here? It is $5,000. On the first, this amount, right? How much you should pay tax? It is 400, fixed. It's 400. And how on the next, we need to pay 6%. On this amount, we have to pay 6%. So together, it gives, actually, that is our tax payable. We have to pay this tax to the government. Okay? Guys, we have less than 2 minutes left. If I continue, I cannot finish, I think. That's enough for today. Tomorrow, we will solve problems on tax, okay? Thank you very much for your patience and time. See you tomorrow. If you have any questions, you can share in Telegram group, okay? And also in this chapter, you may discuss with your assistant teachers, or still, if you want me to solve it and share the video on YouTube, you can just drop it here and I will just solve it, okay, and share with you, okay? Anytime you can watch it. Thank you very much. Enjoy your lunch. See you tomorrow. Bye-bye.